Good day, and welcome to the D-Marq-AnalyticS channel. In this week's video, we will look into an interesting topic, applying chaos theory to predict early signs of disruptive market pivot trends. Introduction. The global market looks like a sea of random noise. But what if I told you the next massive industry disruption is already hidden in plain sight? By applying chaos theory, we can identify the tiny butterfly effects that signal a total market pivot before the giants even notice. Stop guessing and start calculating the unpredictable. Today, we're going to decode something that most investors, executives, and analysts completely misunderstand. The market isn't a machine. It's a living, chaotic system. And if you know how to read that chaos, you can spot the next trillion-dollar disruption before it becomes obvious. This isn't technical analysis. This isn't macro forecasting. This is chaos theory applied to real-world markets. And once you see the patterns, you can't unsee them. Let's dive in. Section 1. The myth of market stability. Why linear forecasting failed in 2025. For decades, analysts relied on linear models, straight-line projections, smooth curves, predictable cycles. But in 2025, those models collapsed. Supply chains reoriented overnight, regional alliances shifted, consumer demand snapped in unpredictable directions. Entire industries were caught flat-footed. Why? Because linear models assume stability, but the modern economy behaves like a non-linear, chaotic system. Enter the butterfly effect. Chaos theory tells us that tiny, localized changes can trigger massive global consequences. A small regulatory tweak in Southeast Asia, a niche consumer trend on a fringe social platform, a minor pricing anomaly in a commodity futures market. Individually, they look irrelevant. Together, they can flip an entire industry. From steady growth to chaotic reality. The idea of smooth, predictable growth is a comforting illusion. Today's markets behave more like weather systems, sensitive, interconnected, unstable, and prone to sudden regime shifts. Once you accept that, you stop trying to predict the future in straight lines and start looking for the first ripples of disruption. Section 2. The anatomy of the initial ripple. Strange attractors in high-frequency trading. In chaotic systems, a strange attractor is a pattern that looks random but actually follows hidden rules. In high-frequency trading data, these attractors show up as microclusters of liquidity, sudden bursts of correlated volatility, unexplained order book imbalances, recurring fractal-like patterns in millisecond data. These aren't noise. They're early signs that the system is preparing to shift. Fringe behaviors in the 2026 creator economy. The decentralized creator economy is now one of the best early warning systems for macro disruption. Why? Because creators respond to incentives faster than corporations. Some examples are micro-communities adopting new monetization models, sudden migration to decentralized platforms, niche creators experimenting with AI-native content formats, rapid shifts in digital patronage behavior. These fringe behaviors often precede mainstream adoption by 6 to 18 months. How small anomalies gain momentum. A tiny anomaly becomes a disruption when it repeats, it spreads, it becomes self-reinforcing, it attracts capital, it triggers institutional FOMO. This is the moment when the ripple becomes a wave. And most investors still think it's noise. Section 3. Feedback loops and the point of no return. Negative versus positive feedback loops. Negative feedback loops stabilize markets. Arbitrage, regulation, inventory balancing, risk hedging. But once a system crosses a threshold, positive feedback loops take over. Panic buying, panic selling, viral narratives, algorithmic reinforcement, liquidity cascades. This is when the market stops correcting and starts accelerating. AI sentiment amplification. AI-driven sentiment analysis now reacts faster than humans can interpret. Here's the problem. AI reads sentiment. AI trades on sentiment. AI amplifies sentiment. Humans react to AI-driven moves. AI reacts to human reactions. This creates hyper-accelerated feedback loops that can flip a trend in hours, not weeks. The visual patterns before a trend reversal. Right before a major pivot, charts often show volatility clustering, shrinking liquidity pockets, fractal compression, divergence between price and sentiment, sudden breakdown of historical correlations. These are the fingerprints of a system approaching its point of no return. Section 4. Mapping the fractal patterns of disruption. Self-similarity in market data. Fractals show us that the same patterns repeat at every scale: intraday charts, weekly charts, quarterly earnings cycles, multi-year macro cycles. If you know how to read fractal self-similarity, you can see the macro pivot hidden inside micro fluctuations. Quantum Tools and Phase Space Visualization, 2026. Quantum computing tools now allow us to map phase space trajectories, visualize basins of attraction, simulate non-linear market paths, identify where the system is likely to settle next. This isn't prediction, it's probabilistic geometry. You're not guessing the future, you're mapping the shape of possible futures. From visualization to practical timing. Once you identify the next basin of attraction, you can time your entry, size your position, hedge your exposure, anticipate volatility, prepare for regime change. This is where chaos theory becomes a practical investing edge. Section 5. Navigating the new equilibrium. Dynamic positioning. Thriving in volatility. Instead of avoiding volatility, you use it. Dynamic positioning means adjusting exposure as the system evolves, scaling in and out based on attractor shifts, treating volatility as information, staying flexible instead of rigid. This is the opposite of set and forget. Cognitive flexibility in leadership. The leaders who win in chaotic markets pivot early, reallocate resources before the crowd, embrace uncertainty, reward experimentation, avoid narrative rigidity. The biggest risk today isn't volatility, it's mental inflexibility. The Chaos Checklist. Spotting disruption early. Here's your repeatable framework. Identify the initial anomaly. Check for repetition and spread. Map the feedback loops. Look for fractal compression. Visualize the phase space. Locate the next basin of attraction. Position dynamically. Stay cognitively flexible. If you follow this checklist, you'll see the next disruption long before it hits the mainstream. If you found this week's topic helpful in any way, kindly hit the like button and share this video with anyone you think might find it interesting. Please feel free to subscribe if you'd like. We want to thank you all for staying till the end, and we wish you all a wonderful day ahead.